One of the hottest metas in all of 2025 has been stablecoins. And I had the unique pleasure to sit down with one of the team members behind USDai and talk about their stablecoin. USDai is a synthetic stablecoin that is backed by AI infrastructure. So we go into a lot of detail as to how that works. What does the process look like? What's the purpose of the native token? What is the purpose of how is the yield generated? The risks, the opportunities, the market that they're in, the bridging between stablecoins and real world infrastructure. A lot of very good, just in general, great content. A lot of things that we're able to talk about, especially if you are currently farming this airdrop, because there is an ICO, there is an airdrop, there are a ton of people who are trying to get their foot in the door. There's a reason why the USDai stablecoin is like 5-6 cents above its peg due to the sheer demand behind the project. A lot of exciting things, and hearing some of the insider information, some of the alpha directly from one of the team members is the cherry on the top. All that and more in today's video. If you enjoy content like this, interviews like this, make sure to let me know. I'll try to do more of them in the future. But if you do enjoy this video, smash up the like. You enjoy content like this, consider subscribing. Without further ado, let's move the video. Well, welcome. I hope you guys are having a fantastic day. Today, I have the pleasure to interview Sam from USDai. Sam, is it Sam or Samuel? Which one do you want me to call you?
Either one's fine.
Okay, awesome. And I go by Alex, and the name's Tactical Investing, but either way. So Sam, stablecoins have been a huge part of 2025. We've seen a massive growth just in USDC Circle doing an IPO. We saw the more recent launch of Plasma gaining a ton of attention, and now we're just seeing a lot of stablecoins come out of the woodwork, and a lot of them doing very similar things. But USDai is doing something very different, something that's not really been done before. For people hearing about USDai for the very first time, can you give us kind of like a brief rundown of what you guys are doing?
Yeah, I think the easiest way to explain it is that we're using USDai, which is an on-chain kind of pool of capital. In this case, it's stablecoins, to then provide loans against GPUs as sort of like an asset-backed financing in a non-dilutive way, which I think is really interesting because if you look at a lot of how like the GPUs have been funded and also Bitcoin miners have been funded well into the past, it's all done with convertible debt, which means that equity holders are constantly getting diluted. But we're designing a system which provides non-dilutive debt financing, just as if you would go and get a mortgage for your house or a car loan, or if you had a 747, right? You debt finance it, right? We're doing the exact same thing here.
Yeah, and I think it's a very interesting approach considering, you brought up the topic of, when you look at the mining industry, Bitcoin mining specifically, you look at CleanSpark, you look at Marathon, you look at Riot, all of those people that hold shares very often continue to get diluted, right? Because of the equity raises. So very interesting approach. Now, for what you guys are doing, obviously, most of it is, I would assume it's only GPUs when you speak of the term AI infrastructure, correct?
Just that's correct. Yeah, it's only GPUs, and it's limited to like a very specific subset of GPUs, which are used for high performance AI operations. And specifically, like if you look at the AI markets, right, we can pretty much break things down into either like training or inference. Okay. So the top tier, newest, the craziest, most powerful AI chips, those ones go to like the hyperscalers, which is Meta and Google, and these ones are being used in OpenAI, and these ones are being used to train the models in the first place. Okay. But once the models have actually been trained and they get released into the wild, you move into the inference markets, and these inference markets, they don't really care like if they're getting compute sourced from GPU that's like a generation older. They really only care about the amount of tokens that you can process at one time. So it allows us to essentially build this one product which is focused on the inference markets, and the inference markets are going to be massive, like absolutely massive. Like everything that you can think about in AI in getting any sort of query or work done, whether it's like video, especially, or chat or anything else. That's all inference based, and that's what we're focusing on.
Got it. Got it. So for USDai as a correctly stated synthetic stablecoin, correct? So how does that bridge the gap when you look at stablecoins and then lending for GPUs? What does that process look like when it comes to involving the USDai stablecoin and then the lending aspect?
Yeah, I think like it's important to make a distinction between like a payment stablecoin, which is like Tether or USDC, which only has exposure to like high quality liquid assets like treasuries, cash, other short term assets. You can think of us as the way that we've designed our stablecoin is that it's almost like a on-chain Aave, right? Which is like obviously like a private credit fund, but just fully built on chain, and that's what we're very similar to. So what we've actually done, and I think this is the coolest thing about our project, is what we've done is we've tokenized the GPUs itself. So I don't want to get too deep into the legal aspects of it, but there's something called the Universal Commercial Code, and for what we've done is take a data center, which is just a big warehouse, and we've actually defined it legally as a warehouse. And that makes a big distinction, right? Because inside of a warehouse, you can do something called bailment. And bailment is when the warehouse itself, which is the custodian, they're able to issue a title for that. So this is how pretty much all trade finance is done around the world. If you go and you look at like the oil markets or copper markets or really any type of commodity, what happens is that commodity sits in a warehouse. It's like every time it's being bought and sold, it doesn't magically change to a new custodian somewhere. Right. You have these documents of title which are issued, and then the documents of title are traded back and forth, and then eventually somebody can come and bring that document of title to the warehouse and take physical possession of it. And that's very similar to how we're doing, where the data center is able to issue a document of title, and in our case, it's an NFT. So they just changed the laws like 3 years ago to allow for these documents of titles to be issued as NFTs, and then those NFTs can be brought to our platform on chain, and the NFT is actually what's borrowed against.
Okay.
Yeah.
Yeah, because I look at the dashboard that you guys have right now on USDai, because I think that's something that's really, really unique as far as the proof of reserves. So people are able to see, hey, this is what they have as far as where the backing kind of comes from, where that yield oftentimes comes from. Because when you look at a lot of stablecoin projects, that yield, whatever that is, 5%, 20%, there's sometimes a unknown as to like what is actually backing that yield, and is it sustainable outside of the Web3 ecosystem? Is it sustainable outside of crypto? And I think that's one of the unique things with USDai is it bridges the gap, and it has a huge support infrastructure from AI, which is a industry outside of crypto, where a lot of these stablecoins really exist within the crypto sphere and don't have a lot of exposure outside of it. So I think that is very interesting. So obviously you guys have some H200s and some rock chips. So what kind of deployments do you guys typically fund? Like startups? Is it expansions? Obviously it's primarily geared towards, at least from what I saw on the website, towards kind of more of the smaller companies that don't have access to the BlackRocks, if you will, of the world. So what does that kind of look like for that aspect of the actual AI infrastructure?
Well, I would like want to determine what small is, right? So small in the AI industry could be like $250 million or $500 million. That's not a lot of GPUs. I just saw this morning that XAI in their new Colossus Center is spending something like $15 billion on new chips, right? So like what we wanted to do with the model is twofold. One, we wanted to prove that it can work with any borrower type. And you can see this on our page. Like we've been able to do 500K loans, which is impossible anywhere else. Like if you have $1 million worth of GPUs and you're going to go to a private credit fund, they won't even talk to you if you don't even have like $25 million just to get in the door. And then after that, there's negotiations around like interest rates and covenants
Right.
and all like it's a whole process, and it's going to take weeks and weeks and weeks, and you're
Mhm.
probably going to spend somewhere between I don't know $100,000 to $300,000 just on the legal to
Mhm.
get it done with one of these firms. And the cool thing about what we do is we have this, the loans themselves can be originated for nothing. Like as soon as the
Mhm.
NFT is created, you can take it to the protocol and borrow against it. And
Mhm.
as you know, like on-chain costs to do these borrowing operations is nothing.
Minimal, yeah.
So yeah, so the majority of work that we do on our side is really like valuing the the chips themselves and making
Mhm.
sure that we have a good price for it, and then also to determining the proper interest rates that's going to be set inside the protocol.
Okay. Yeah, because I think that's one of the things as we kind of move on to the next question is all of this is backed by the GPUs themselves, right? So when it comes to risks, because people have seen stablecoin yields in the past, right? We've people oftentimes see high numbers for stablecoin yield, and one of their first thoughts is to think of your Terra Lunas of the world and what happened with the Terra Luna collapse back in the day, right? People thought, this yield of a stablecoin being 20%, some people thought it was realistic. Other people were like, there has to be something else associated with it. So,
Mm-hmm.
when anytime you see a high yield, and I say high in a relative term, because for some people high is
In the
100%
teens,
yield.
yeah.
Yeah, for some people is 10%, and they kind of get freaked out by double digits. So, what are the risks for something like USDai? Obviously, the everything is backed by the actual asset, the GPU itself. So what is because everything has a risk, right? You have to kind of
Right.
do this when you're building a company. You have to look at what are the risks, what are the downsides, and try to mitigate those. So what would you consider for someone looking at something like USDai? They think there's a ton of potential, but they're thinking of like what are maybe some of the risks associated.
So I think the question about this is like these chips depreciate to zero within
Mm-hmm.
5 to 10 years, right? Depending on where you get your data from.
Mm-hmm.
So our question is really, can we structure these loans to stay ahead of the depreciation?
Mm-hmm.
And so like there's this term amortization, right?
Yep.
Uh, and amortization is just essentially in our case like the value that we're providing to these chips over time.
Mm-hmm.
And for us, like we amortize the chips to zero in 3 years.
Okay.
So our assumption is that anyone that's borrowing with us after 3 years, their chips are going to be worth zero. So like coming back to like the Aave example, right?
Sure.
Like if you have Bitcoin,
Mm-hmm.
that Bitcoin you deposit into Aave, and Aave becomes the custodian of those of that asset.
Mm-hmm.
You're able to borrow against it, and then Bitcoin's able to go up and down and up and down.
Right.
But as long as you stay above your liquidation threshold, you're able to maintain that loan.
Sure.
In our case, we you can essentially straight line draw from the starting price to zero. So we just
Okay.
mark down the value of the assets every single month. And the borrowers actually have to stay ahead of that. So it's like you're putting an asset into Aave, but your asset price is going to go to zero. The collateral value is going to go to zero over time. And so
Gotcha.
that's just our main risk and assumption is that like, can we price these loans? Can we get paid back fast enough so that we can stay ahead of the depreciation? Because if there is a default,
Mm-hmm.
like what we have when a default occurs, you have to make monthly payments, right?
Right.
And if you miss one monthly payment, you go on notice. At the second monthly payment that you've missed, you're now in default. And what happens is the NFT goes into a liquidation auction.
Okay.
Anyone can bid for that NFT, and the person who buys it becomes the new owner of it, right?
Okay.
They can take over those chips. They can start earning income from them. They hold the title to those chips. So like if they want to, they can go back to the data center. They can renegotiate a new service agreement. And what's good about that is that like there's a we can talk about this next, but there's a lag time in how fast you can get these chips installed. So for a lot of people to be able to buy installed chips in a data center already that you can just flip a service agreement on, they might even pay a small premium because they start getting paid right away and they don't have this lag period. So that NFT gets sold, and the new title owner then gives us cash back to the protocol and covers the debts, and then the chips can be used as they wish. So really the question is like, are we structuring these in a way which allows for liquidations to happen in an orderly fashion if they need to happen, and two, is the pricing that we're going to get through the liquidation enough to cover the debt costs that we have, or that the protocol has. And so I think we've done some really interesting things. I mean, like I've just started this year, but the founders, David and Connor, have been working on MetaStreet for a long time, and they've gone through, like, we sat down and we did like an hour-long presentation about like all the changes and updates and different variations that MetaStreet went through. Because before GPUs, they were building debt markets for like PFPs, like for punks and other types of like terrible assets, right?
Sure.
But they always got paid back, right? Because like they designed the system in a way to assume that the collateral value was always terrible collateral, right? And if you always assume the worst prices, then you can give loans in a more conservative way.
Okay. Yeah, because I think that's one of the things, even on the when you look at this, somewhat already being done on the crypto mining scale, right? A lot of times companies will take out loans against their infrastructure, right? In the mining infrastructure, a new Bitcoin miner comes out every year, right? So eventually that asset depreciates in value, which oftentimes those companies who are acquiring that asset use that as a tax write-off, right? So there's a huge benefit to them long term. Is that something that you guys are able to take advantage of as well, as far as the depreciating value of that asset through the NFT tokenization? Or is that really just primarily from the company?
Yeah, that's actually one of the big cherries on top for this year.
Okay.
Is that with the One Big Beautiful Bill, you have 100% asset depreciation, or you have 100% bonus depreciation for the GPUs for those assets that you buy in the first year. So you can write them off. You can write you buy $1 million of GPUs, you can write them off immediately. And the cool thing is like by getting debt through us, say we provide 70% LTV loans against the infrastructure.
Okay.
So like you can essentially get $1 million of GPU exposure and the tax write-off for only $300,000.
Wow.
Yeah.
It's pretty cool. And I think looking at aspects like that, being able to, for a whether it's a startup or an early beginning company, looking at being able to take advantage of what's happening in the stablecoin industry, something like USDai fills a gap, right? Because you oftentimes want to be involved in projects, you want to be involved in companies that are filling a gap where there's a previously non-existent market, right? So that's one of the things I thought was quite interesting with USDai as I looked through the docs, is it really does fit a gap that there's no competitor really, at least from what I can see right now, for the likes of what you guys are doing. So, what is, obviously you guys are, I would say, relatively early in the stage of growth for USDai. There's still a lot more to come. What are kind of the future goals, expansions? Are there going to be more product lines? Are you going to expand past just GPU? What does that kind of look like for the 5 years is a long time in the world, a long time in crypto in general. So, what does kind of like the next couple of years look like for USDai?
Well, thankfully, I think, I was talking about like MetaStreet before, but thankfully, like the David and Connor have found a market which is insatiable, right? There's just not enough money that can be put into AI infrastructure. From the reports that I've seen from McKinsey and other places, between, like you said, in the next 5 years, I think there's something like $6.7 trillion worth of CapEx that's going to happen. These are just numbers which I can't, but you and I cannot think. We can say them, but it's really hard to quantify just how big that is.
Yeah, a lot of commas, a lot of zeros.
So. Yeah. You think about like an airport, or like a train station, or like something that probably costs maybe like $5 to $10 billion, and you're spending 1.2 trillion a year on capex. So you're essentially building something like 200 airports a year of AI infrastructure and data centers. It's just it's just incomprehensible how much capex is going to happen. And really, there's, everybody talks about like bubble AI and whatever, but I think we're in a much different state than we were back when the internet really kicked off in the first boom.
Sure.
Like nobody really knew about like what it could be done with it. You had 1,000 ideas about what you could do with the internet. Most of them turned out to be wrong, and a lot of those companies went to zero. But if you look, 10 years, 15 years, 20 years later on, like everything is an internet company now. Like, every company is an internet company, and it's the same going to be with AI as well too. Like every company is going to use AI. Like the demand for it is just so large and beyond the scope of anything that we've ever built before. And it doesn't seem like there's ever going to be, at least in probably our lifetimes, a limit to that demand, because you think about just how much compute is needed to do all the things that we want to. Like chatbots are cool, right? They provide a lot of utility, but really when you start to scale into like video, the compute demands just shoot through the roof. If you're thinking about how much compute will it take to give everybody in the world like on-demand 4K streaming like live video using AI, that is just like magnitudes larger than anything that we can do now, and it's going to have to be like a complete rework of society. And so I think that, like, yes, there could be a bubble right now, like people are building AI as fast as possible, but 5, 10, 15 years down the road, like there's no going back at this point.
Yeah, I think it's, when there's oftentimes, like, when people look at graphs, right? You've kind of seen the illustrations where you're seeing a massive rise in something, right? And people are so zoomed in on where there's like a small dip or a lot of uncertainty, and then you really zoom out, and it was just like a small tiny speck as everything else just constantly grows, right? Like, it's like when you look at Bitcoin, when Bitcoin corrected, 2017, 2018, and everyone's freaking out because Bitcoin dropped 50%, and then you zoom out and you look at the broader scheme of things, it just continues to go up as far as adoption grows and everything else grows alongside with it. I think that's kind of where people look at AI, because it's so out there, and everyone thinks it's overvalued, and then zoom out to 5-10 years from now, when we look back at this, people are going to, oh, that was almost nothing in comparison to the growth trajectory that's continuing to happen. So for USDai, the GPUs aspect, expansions, that is for the stablecoin, right?
Well, let me just like kind of frame it a little bit more. We've been building DeFi and stablecoins and all this for like 5 to 7 years now, and we've played all the on-chain games to find out like what is the best distribution model for tokens that are really volatile and that can be used for things like governance and utility and protocols. What we really haven't been able to do is connect everything that's happening on chain to the actual financial markets happening off chain. And like everything that we have, all the big protocols that we have in crypto right now are pretty much, a lot of them just recycle yield, right? So like I mentioned, Aave is a money market, right?
Yeah.
You're dealing with, like you put in Bitcoin, you borrow money from somebody else, and you pay back that loan later. There's no like economic value that's actually being generated from that. It's just a way to get leverage on your assets. And many of the other protocols within DeFi are figuring out how can we recycle yields or create some sort of like tranching system, or really like or provide liquidity to swaps. And that's all great. I mean, that's really like the core infrastructure that you need to be able to like swap from one asset to another, or to be able to take out a loan against assets that you already have. But if you go to a bank, the money market guys don't really get invited to the dinners, right? Because if it's the capital markets team, right? It's the front office team that is going out there and the bank is providing a loan to build bridges, or to build factories, or to build something that increases the amount of economic capacity in the world. And so I think when you look at our project, at least from what I have seen, I think it's really one of the first real capital markets projects in all of crypto. And the only reason that we're able to do this is that this is such a new industry that the banks and other private credit firms have just not been able to carve it out and regulate it to death. And this is like a common thing that you see in people talking about like RWAs and stuff. Like I've worked at a company that sold houses before. It was like okay, but like it wasn't going to grow, right? Because it was really dependent on like one operator selling houses or like tokenizing them and selling pieces off. And you're just downstream from just buying that. You could have just bought the house yourself. And house markets are really well regulated. Other types of asset markets are extremely well regulated, and the banks know exactly how to lend to those markets. This is such a new industry, and the demand for capital is so high that we really have an opportunity with USDai to build something new and novel that can take hopefully a pretty big size and chunk of the market share. Because what crypto is able to do extremely well is allocate and collect capital into one place that can then be directed towards different sources. So overnight, or even in a couple of minutes, you could raise, like we did at our last cap raise, you can raise $250 million.
Yeah.
And then that $250 million can now become productive capital that can be lent out. Like that only really happens in crypto. Like every time we do a cap raise, my dad calls me. And he's a real estate guy, and he's just the sheer like surprise and just the numbers being thrown around here. Like we don't really think 250 million is a lot. I actually think 250 million is a lot, but like in crypto, like sometimes you see a lot bigger numbers, so it kind of wears off after a while. But for him, like seeing us raise that much that fast in such a little time, it's just mind blowing. Because for him on a real estate deal, it might take him 9 months to put together 30, 40, 50 million dollars.
Sure.
And we can do it. We can do it in a couple of minutes. And so I think that's really the great thing that we have. And I think we're going to start to see, as we go forward, these kind of generalized lending pools where you see huge collections of capital that flow in from all around the world and then are able to fund either like debt markets like we have, or other types of like real world projects. Really, the thing that you have to do though is try to keep as much on chain though. If you're just like what you don't want is to be a wrapper of an asset that nobody wants to buy, or like a type of company that nobody wants to lend to. Like that's not what you want to do. You want to have pristine you want to have pristine markets, pristine capital, and the ability to scale into the billions. And I think that's where we are. And so if you look at in crypto, like what is actually able to provide double-digit returns above $100 million, which is not a lot. It's really only Athena, right? Like or some type of the basis trade. This is the only really clear path that you have to achieve those yields. And so I think us stepping in as like a new way to allocate capital into markets which can scale to hundreds of billions of dollars.
Right.
Like and not even blink an eye in the total size of the market, and still provide like mid-teen returns. I think it's something special.
Yeah, and like you mentioned, when you look at a lot of crypto, right? When you look at lending platforms, you look at a lot of DeFi platforms. Like you said, they cycle through, right? That capital stays within that platform, right? So the only yield you're generating, you deposit your Bitcoin as collateral, you borrow against it, so you can generate yield on another DeFi liquidity pool, right? So that a lot of that capital stays solely within that DeFi ecosystem. So what you guys are doing with USDai is you're bringing that yield from something outside of just DeFi. And I think that's one of the things that's super interesting about it. And there's a lot of opportunity with it.
Yeah, I did want to touch on something else. So like when you talk about stablecoins, there's like two parts. One is liquidity, and the other one is solvency. So we talked about the solvency part where like are the people who are taking these loans, like what happens if they go into default, like how we try to mitigate those issues. But on the liquidity side, like I said, like if you have 250 million that can flow in at one point, you also have 250 million that can flow out in a few minutes.
Sure.
If people perceive that there's some issue with it. And this is really what led to the downturn of Luna.
Yeah.
Also, there's been many other type stable coins backed with like real world assets, like Anzin or Tangible and a few others, which just like blew up because they had a bad mix of assets. And so like unlike them, like houses are really slow, and you shouldn't back stablecoin with them. Like it takes a long time to sell a house.
Yeah.
Since all of our NFTs we can just put into a liquidation auction, we have primary title as well too. They can be flipped essentially pretty quickly. So we can get the money back in case of liquidations. But in case there's a liquidity crunch, in case a lot of people want to leave at one time, there are some restrictions, right? So one of the things that we believe is that if borrowers have not defaulted, we assume they're good borrowers and that they're going to continue to make their payments. But there may be a time where a lot of people want to get their money back. And so what we do have, though, is this income stream. So because we're amortizing the loans to zero so quickly, we're getting about like 3 to 4% of the total loan book, plus like principal plus interest, paid back every single month. And so we can direct this like a fire hose to people who want to get out. And then we're building something on top of it called like QEV, which is just like it's called Q extractable value. Essentially, people that want to get out faster can like bid a little bit more, and then they would essentially move up to the front of the line. So, there's been a lot of thought that's gone into this of like, if you have these like fixed loan durations, how do you balance that out with like the speed and liquidity of stable coins?
Yeah, I think that's an interesting approach, and obviously for people watching this for the first time and they're curious about USDI, being able to kind of know some of the intricacies, especially some of the fallbacks, some of the opportunities, because oftentimes when anyone gets involved in crypto, whether that's stable coins or yield, like we kind of talked about, there's always risk. So being able to know that a project like USDai has taken multiple measures against the risks that always exist in every project, being able to have multiple avenues for the risk mitigation, I think is always important. I do want to know, for your focus on GPUs and the tokenization of GPUs and really that massive market growth, when you think about AI growth, one of the other things that has grown tremendously has been energy. Has there been any thought from USDAI's perspective, because energy plays a huge crucial role into AI, is the idea of tokenizing energy? Has that ever been kind of a thought in anything that you guys have kind of explored with? Just as a curiosity, knowing energy is a huge aspect of AI that plays a role into the actual infrastructure itself, into the GPUs.
I mean, I think it's let me reframe your question.
Sure.
Again. Let's say you have a tokenized version of some energy thing. I don't know if it's a power plant or something else. If the borrower goes into default, like how do you liquidate that, and how long is it going to take, and who's actually going to buy it? So one of the things about the GPU market that we really like is that these chips are somewhat fungible, right?
Sure.
Like they're not dividable, but you can say that, oh, okay, I've got, it's just like having tokens, right? That you can't divide. It's like, I've got 10 chips or I've got 100 chips, right? Those chips have a very liquid market that is dealing, billions of dollars a year in secondary volumes. And these chips are relatively easy to sell. But as soon as you go towards these like more illiquid products, like if there's a default, someone has to be a buyer, or everything what you don't want to happen is for there to be a default, and now you're stuck in bankruptcy court for the next 4 years.
Sure.
That's the last thing that we want to get to. So I think with the GPUs, we can sufficiently say that there's enough liquidity that if we had to sell the units, somebody's going to be a buyer. There's always going to be a buyer for it.
Okay.
And it's hard to say with any other type of asset, like whether that's actually the case.
Yeah, and completely understand. So, for the future of USDAI, right now you have the stablecoin itself. What does that look like when this is going to be talking crypto? We know that there's going to be an airdrop There's obviously the ICO route. There's going to be the airdrop route. I'm not going to kind of get into the nitty gritty as far as the two different ones. Obviously, if you're going the ICO route, you have to KYC. For people in the US like myself, I'm going the airdrop route. So what does that look like? I'm assuming there's going to be a native token for USDai. What does that look like for it? What does it look like? What's the kind of the purpose? What does the airdrop look like? What is the kind of the future of that?
Yeah, so this is going to happen sometime before between now and Q1.
Okay.
It's really just dependent on how fast we can source out all these loans and how much yield we can pay out. We also do have like either it's going to be 6 months or $20 million of yield paid back. And yeah, you can choose to be in the ICO. I will tell you that with the upcoming Clarity Act that's going to be passed, companies will be able to raise up. Last I saw it was 15 million, but I read another source that it was 50 million.
Okay.
So that we could run a legal US-based ICO up to 15 million. But that's dependent on this really important piece of crypto legislation being passed. So 7% of the total supply is going to the ICO, another 3% is going to the airdrop. And it'll just be based on this points program that we have right now. And I think that we've got to really to frame the kind of meta strategy for the strategy from us as the company.
Sure.
Right now, all of the USDai and staked version of USDai is backed by treasuries, 1-to-1, every single one. But the yield only goes to SUSDai. So right now, people are sitting in USDai and using it in different DeFi protocols because our points that we're giving is higher for the USDai side.
Correct.
And so all the yield that USDai is backed by, all the treasury bills, that all flows to SUSDai. And so that gives us a bootstrapping period where we can start at zero and scale up to several $billion dollars. And it allows us to say that it's going to take 2 to 3 months, maybe 6 months to get these GPU loans in place because doesn't happen overnight.
Sure.
We can use this yield from USDai to kind of offset the yields on SUSDai. And so in 6 months, we'll have all the loans in place. We'll be able to not have to depend so much on USDai. It'll still be an important part of the ecosystem, but we'll have several $100 million of loans that is providing actual yield back to users instead of just recycling. So that's the reason that we did everything.
Okay. And then I know right now, really the last thing I want to highlight until we kind of get to the conclusion and final remarks. Right now, the biggest question a lot of people have, and I'm not sure if you're able to fully disclose it, is the cap of 500 million was reached ridiculously fast. I mean, it grew really, really fast. So a lot of people are asking, is that cap going to get raised before the airdrop? And maybe what are some of the opportunities that currently exist? I know there's you guys have collabs with the likes of Gearbox, some other DeFi protocols, Pendle. What would from your perspective? You're looking at your own project. Are you able to give us any insight if that cap is going to get raised? And then what would you recommend people that want to get involved? They're not too late. There's still plenty of opportunity. What would be your two cents?
Yeah, so the cap raises are really going to be dependent on how fast we can source the loans. Okay. So remember, to get chips and then get them installed, because we don't give loans until the chips are installed and operating and insured. Okay. It takes time. So you're looking at anywhere between 4 to 12 weeks to do that. So we could take in $250 million in a couple of minutes, but it's still going to take us time to source the loans. And so, there's no point in us raising the caps to $1 billion or whatever, because it'll give us some more money, but until we have the loans originated, and the utilization on the debt markets goes up, it doesn't really make sense from a strategy perspective. And so that'll be the core driver of cap raises. We did announce one today, but that's to help wind down the Euler markets. Okay. That's going to be on Wednesday this week. I don't know if this episode will be published by then, but
it will be.
Okay, great. So on Wednesday we're going to raise the caps by another 100 million. But that's all those funds will go. Actually, I think when you're talking about strategy, this will probably be really nice. So we're going to increase the caps by 100 million. All that goes into auto USDai, which is like a liquidity
Perfect.
strategy.
Okay.
And that'll earn 25x points for 30 days.
Perfect. Okay.
Which is really cool.
Yeah.
Yeah.
So that's going to be directly for, because auto USDI is just going to be for those with the ICO route, correct?
I think we'll have I'm not sure if it's just for the USDai or
Okay.
SUSDI, but even if you're getting points from there, you can always buy some YTs, which give like really high leverage and a high amount of points to flip sides. So like the most optimal strategy really is to like farm on the ICO side, and then use the SUSDai YTs to kind of like bring you back onto the airdrop side.
Okay.
Because I think the leverage is like $1 of SUSDI YTs gives you like 25x or 30x. It depends on the price of the YT, but it's somewhere between like right now it's 25 to 30. As we get closer to maturity, it's going to go up to like 500x.
Okay.
So because they get cheap, like the way that the YT works, it like goes to zero. So they get cheaper as they get closer to maturity. So you can buy some YTs and get massive exposure, and also the 25 or the 12x points on SUSDI to then flip yourself over to the airdrop side if you want to.
Okay. Yeah, because that's the strategy I've been running. Doing I bought YTs, which have actually increased in value because of the high demand. So even if I was to sell my YT right now, not only do I have the allo points, but I also made 20%. So it's a win-win situation because of the high demand. The last thing that I want to highlight before we have closing remarks is, because of the demand, and obviously it's kind of going to be a little bit alleviated once the raise happens Wednesday or the cap opens up. The overvalue of the dollar, right? Because people, due to the demand of USDI, I've seen it. I don't know what it looks like at this present moment, but I've seen it be $1.05. So anyone converting from USDC into USDI automatically loses 5%. That is how much demand is there simply for your product. What are your thoughts on that? What do you think? Just what are your general thoughts? I hear a lot of people say different things.
So if there's any type of asset where the supply is capped, like obviously it's going to have some volatility into it.
Yeah.
I think that we would love to raise the caps higher, faster, but again, like the GPU book needs to or loan book needs to catch up, and that's not something that we can speed along. It's like it's the real world, right? It's not it's not crypto.
Yeah.
And so like for us, like we know there's a lot of demand. It's actually really surprising. Every day I wake up and I check Pendle and the price of USDI, and I'm just shocked.
Yeah.
But yeah, the caps will increase soon. But again, like there's a lot of people that show the math on, like if I buy at $1.05 and I'm putting it into Pendle at a 50% rate, like the math works out. Like each strategy has their own parameters. But if you do the math, like you have to be wondering, like why is anyone buying at $1.05? Well, the math works out, right? Like somebody's profiting, and somebody's making money at the end of the day, and so that's why they're doing it.
Okay. Yeah, I just find it interesting because that's one of the things that a lot of people say. Oh, maybe it's their way to be able to get more allo points, whatever it is, right? They're saying, oh, don't go in at $1.04 or $1.05. But the way that I look at it is I went in at 102, and what I've done in allo points and the value of my YT going up has more than enough made up for any of that. So everyone's going to have kind of their own approach. So any kind of final comments, Sam, as far as anything else that you want the audience to know about what you guys are doing, the token, anything else that's going on?
Yeah, I would just say that like I've worked in this industry a while. Since 2017, and I've seen a lot of projects kind of come and go, and teams build. And when I found USDai this summer, I was really impressed. And just the more that I did research, and the more that I have talked with and spent time with our co-founders David and Connor, I'm even more impressed. Like they have been through the trenches in trying to find like the right product and what works.
Sure.
And they know the game really well. And it's not just a random team that's created something. No, it's a team that's been building for 4 years, that has iterated and iterated and iterated and finally come across this like one very narrow type of market,
right,
that we're not planning to expand out of, but has an incredibly huge TAM that we can go after.
Sure.
And is just executing day after day. And I wake up every single day and I'm just happy to be on the team and happy to see what we're doing. It's so surprising.
Yeah.
So I'm just blown away by everything that's happening. I didn't like, I knew it was going to be successful, but I didn't think that it would be like hot girl summer.
Well, you guys struck while the iron was hot. Bitcoin at all-time highs. You had Circle IPO and do like a 10x in like 2 days. You had Plasma that did extremely well. Kind of a little bit on the downside right now, but everything stablecoin. If you think about like the perfect time to launch something like this, alongside of the massive growth that we've seen with the likes of Nvidia, the likes of Oracle partnership. There's just so many things positive. You're essentially putting two massive atomic bombs together of AI massive growth, stablecoin massive growth, and putting them together. It's just going to blow up. So a lot of exciting things for what you guys are doing. I really appreciate you guys you coming on the channel. This will be posted on YouTube. This will also be on X. If you guys have any questions, more than happy to kind of facilitate those, answer those, and then if I can't answer it, join the USDai's Discord, right? You guys have a Discord.
We have a Telegram channel.
Telegram channel. So join their Telegram. I'll leave a link to it down below if you guys have any questions. Thank you for everyone who tuned in. And until next time, guys, stay invested.